All right, welcome back to today's lesson. And now, for the first title of today's lesson, I will introduce to you the first candlestick pattern. That is bean bar. Okay, bean bar rejection wick. And this is very common candlestick pattern, especially at gold and forex market. For gold, it reacts strongly to liquidity graphs, and it will form a long wick, which means smart money footprints. Yeah, it's showing you the smart money footprints. And I will introduce to you two common type of bean bar. The first one is bullish. Yeah, the bullish one. And this is the picture of it. Okay. As you can see on the on your screen, this is the bullish bean bar. And obviously we can see it has a very long lower wick, right? Very long lower wick. And this indicates that the rejection of liquidity below swing low. And this is best accuracy on H1 or H4 or 15 minutes or even 5 minutes during New York session. Okay, we can trade New York session in the New York session. And 1 hour, 4 hour, 30 minutes, and even 5 minutes for scalpers like that, like us. Yeah, to set up the signal by using this bullish bean bar. And we need to have enough preconditions, okay, to make sure that this is a successful bullish bean bar. Long up, long lower wick. Yeah, you can see long lower wick. And small body, especially the small body. You can see the lower wick maybe 3 to 4 times length compared with the body, right? And the upper wick is very small or uh very tiny. Yeah, or it's very tiny or it disappear. Okay. And it will located near or at the support zone or after a downtrend. Okay, near or at the support zone or at after a downtrend. Why do I mention near a support zone? Because first, when we identify the support zone like this one, and this is the 1 hour for gold, right? And you can see on the chart, the support zone is where we can see the candlestick pattern have the bullish momentum when it touched to that right zone. All right, like this one. And I will mark it into blue. Yeah, to represent for support side. Okay, and let's pay attention to this candle. Okay, I will zoom it up for you to see it clearer. All right, near the support zone, because this is the one you can see there was a lot lower wick candlestick appears here at 41.94, 41.94 to 95. All right, and at this zone when it touched to this support zone or near support zone, you can see that 1 hour candle of gold USD having a candlestick and its lower wick is very long. All right, it's very long. And the upper wick is just a small one. Okay, and for the body, it's small. Yeah, it's small as well. So this is a successful bean bar. Yeah, successful bean bar. Okay, and it indicates for the current uptrend at the moment. Okay, and however, it also have another condition is that after a downtrend, right? Even though it's just short, but this is a downtrend. All right, so this is the example for you when we're looking at the bullish bean bar on the gold USD market. Okay. And yeah, this is the example of gold market at this time. And this candlestick was 2 a.m. Yeah, 2 a.m. according to France time on Friday. Okay. And this morning, this early morning in the Asian session. And that's why gold have very strong bullish momentum and heading to 42, $30. Yeah, in today Asian session. So this is a bullish bin bar. Okay. And another one having its own even though that it show the bearish momentum or in the orange color. However, we can see it as the bullish bin bar. In case where you have the bearish candle with a long lower wick and a small body, it can be considered as a bullish bin bar, but only if it's closed high. Yeah, it closes high and is located at a support zone or liquidity grab area. And let's looking at the example. Yeah, for that bearish candlestick, bearish bin bar, but it's not because it still have very long lower wick. Okay, for example, like this one, you can say that it's a very long low wick after that. Yeah, and it's just a short term for the sideways. But however, after that, it falls. Yeah, it falls to break out. So this is the fall signal. Yeah, for the bearish candlestick having a long lower wick. Yeah, so let's find another one. So how can we identify the Okay, so let's find the correct one, the correct signal, and then we have comparison between those two situations. Okay, two situation. Okay, so I pay attention to this liquidity zone. This one is another bearish bin bar. Yeah, but it's not the one I mentioned to you in this case. Support zone. First, we need to pay attention to the support zone. Yeah, it's keep on forming a very long lower wick. Yeah, for this candlestick, this is not a bullish bin bar because the body of this candle is very large, and this is the bearish continuing candle. Okay, bearish continuing candle. So it's a bit different between bearish bin bar because of the body. Yeah, because of the different body. All right. It's gonna take a long time. So before that, yeah, I forgot that I already prepared for the example of the second situation that I already told you. Yeah, this is the bearish candle, but long lower wick, long low wick, and a small body like this one, and can be considered as a bullish bin bar. You can see this. After that is having a short-term uptrend. Yeah, but only if it close high, and is located at support zone or liquidity grab area. because before this candle, in the history, there was a very strong support zone. And when it touched to that price zone, gold and the price immediately having the bullish momentum, dominating the market. Okay, and that is why, even though this is the bearish candle, however, we can consider it as a bullish candlestick pattern because it meets those conditions. All right. Small body, and the small body is the key point. Yeah, small body is the key point of this case. If you see that it is difficult and it's easily trapped, like this case we just see. Yeah, it's after that it's forming a downtrend, continuing for the downtrend. And this is gonna be, you cannot pay attention to this case. Yeah, just focus on this one regularly. All right. So ignore on this case to protect your winning rate. Okay, because there's always probability. There's always probability. If we know one more case study, besides of the official one, we can have another experience for your trading strategy. However, it's also have risk. Yeah, it's also have risk. And if you want to protect your capital and increase your winning rate, just remember the regular one. All right. We don't need to remember all the candlestick pattern all the time. We shouldn't. We no need. Yeah, we don't need to do that. But when we decide to trade with one favorite candle pattern, you need to remember all the conditions that set up together. All right, because when you lack of one of conditions, it will cause you a false signal. Yeah, and these are, it needs to meet enough. Okay, I would like to remind you again, it needs to meet enough condition. And this is the one I want to tell you. That the special point you need to remember. You can take a screenshot or write down or watch this video later. Okay, because I already recorded. And the next one is bearish pin bar. Yeah, on the other hand, on the opposite to bullish pin bar, is the bearish pin bar. And it will have long upper wick, right? It will have long upper wick because it's opposite to the bullish pin bar. Okay, it will have a long upper wick, rejection as supply of previous high. And it's also best accuracy during high volatility when the New York opens or trading news. Yeah, or trading news. And it will appear near or at resistance zone. Yeah, resistance zone. Or after an uptrend. Yeah, after an uptrend. Okay, keep in mind for these conditions that it must be happened at the same time. Okay, cannot lack any one of them. For example, you can see that it was the starting of the bearish pin bar. It's located at the resistance zone. All right, because you can see it was nearly three times that gold price rejected for the bullish momentum when it touched to 42.61, right? And this is the bearish one. Even though that the price is close higher than the previous candle. However, the distance is not significant. Okay? And it's long upper wick. It's very long. Yeah, many times compared with the body of this candle. So it can consider at the bearish candlestick because it's near the resistance zone. And lastly, it will have very small body. Okay, very small body. Okay, so this is the example for you when we can see a resistance, a bearish pin bar when it's near to the resistance zone. Okay, and another one is more traditional. Yeah, traditional bearish pin bar. The first thing we need to looking at the resistance zone first. Okay, resistance zone. Okay, for this one, yeah, this one is another pin bar that located at resistance. Yeah, because it's the previous candle formed such a significant upper wick, right? So this one can be considered as the bearish pin bar. Okay. And you can see obviously that after that is forming a downtrend, continue for the downtrend. However, it didn't meet the condition is that after an uptrend. So if you want to enter any sell signal, this is gonna be a risky for you. However, it's not touched. However, yeah, you can say that the candlestick after that will sweep your stop loss because it's forming a higher lows. Sorry, the higher wick. Yeah, the upper wick is higher than the previous one. So if you set up a sell signal and set the stop loss above this pin bar upper wick, so it will sweep your stop loss, right? So this is gonna be very risky for you if you set the signal by using this pin bar because it's not meet enough condition. So that's why I advise you, we need to remember all these conditions because they must be happen. Yeah, they must happen at the same time. All right. And you can practice to looking for the bearish pin bar on the trading chart, on gold or currency pairs trading chart. For this one, this can be considered as a bearish pin bar. However, the body of this candle, yeah, even though it's small, but yeah, it's still safe for you. It's still safe for you anyway. Okay, so when we find the candlestick that it meet all conditions like this one, yeah, like these ones. So is this gonna be safer for you to set up the sell signal by using the bearish pin bar? Okay. And why does it work? Because gold always sweeps the stops before reversing. So the pin bars serve stop hunts. It will show you the stop hunts at institutional entry. So in the opposite case, the candle with a long upper wick, but the color is green and it shows you a bullish momentum and a lower close located at resistance zone. It can still be considered as a bearish pin bar, like the first example I just showed you for this candlestick. Yeah, for this one. Okay. The key point, the key point is here. It's near the resistance zone and the body tiny. The body is tiny and long upper wick. All right. These are key factors that it will increase your winning rate for this signal. Yeah, for this analysis by using the bearish pin bar. And the next one, the next candlestick I want to introduce to you that having high accuracy rates when we trade gold USD and currency pair. That is the engulfing pattern. So today I would like to review all the special candlestick pattern for you once again. Okay, and note only the one that's very efficient for you to help you increase your winning rate. All right, regarding to the engulfing pattern, we need to understand about the order block. All right, the order block. So that is the last candle. If it's a bullish order block, it's gonna be the last bearish candle. And the next one is the bullish candle. And the area will form, this area we'll call the bullish order block. Okay, and the condition of this engulfing pattern is buyers overwhelm sellers. And it's also best accuracy when candle close above the previous order block. Okay, so for the bullish engulfing candle, there's only two conditions that you need to remember to use it in your trading strategy. All right, and this is the example for you to describe for the bullish order block. And remember, when we see the last bearish candle happened, and after that, it was a very strong bullish candle or Marubozu, or we usually call it with Marubozu or strong bullish candlestick pattern. It's gonna be a bullish order block, and this area easily reverse when the price touched to it once again. Yeah, you can see the price after that, even though it was decreased. Yeah, even though it was decreased from the after swing high. However, when it touched to this order block area, and you can see it start forming a lower wick. Yeah, very long lower wick here. All right, so when we see the bearish candle, and after that, it shut and big, marvelous Marubozu or strong bullish candle. That's the bullish order block. And yeah, this engulfing patterns is best accuracy when candle closes above the previous order block. All right. So this is the example for you in the gold chart as well. Okay, so for this one, this is the candle, the consecutive bearish candle. And after that, this 1 hour candle at 12 p.m., right? On Tuesday, 2nd December. Was a Marubozu. So this is called the other block. However, yeah, this was, yeah, I don't care about this one. I just want to describe to you this case only. So when it touched to this right zone, yeah, forming a Marubozu, and after that, it was the uptrend. Okay, and then when we switch into a smaller time frame, you can see there will be a bullish candlestick when it touched to this other block. Okay, let's try to mark it as the order block and switch into a smaller time frame to see the detailed movement of the price. Okay, so this one I just marked for you in a 1 hour chart. It was the block area. And after that, okay, hang on a second. I need to check once again. Oh, it wasn't. December 2. Yeah, this one, the block area in 1 hour chart. And if you wish to switch into 5-minute time frame, you will see that the candlestick pattern when it touched to this, or the block zone. Yeah, it's very strong bearish momentum and it doesn't have, it doesn't have the bullish momentum, right? Because there was a strong, very strong bearish momentum, and that is when the big players start hunting your stop loss, a liquidity hunt. So this is the fault, the fault trap for the bullish or the block. Okay, the trap for bullish or the block. And that's why for every trade, our analysis is not correct 100%, right? Even though that is the theory, we can say that, oh, the theory is this area is the block, bullish or the block, and there was a Marubozu candlestick break out from that resistance. All right. However, when the price heading back to that order block area, it wasn't bullish again. However, it's still heading down and keep on dropping drastically. And that is when the big player trap you and try to wash out on your account. Okay, so that's why on my trading live stream, I always remind you to set the stop loss order. Okay, stop loss order is a shield. It's the shield to protect you from burnout account. Okay, so that is the theory. But when we practice on the real trading chart, it's totally a different story. Okay. So let's come back to, let's find another example that it will correct to this case. Okay, I pay attention to this point, this period. 1 hour chart, of gold USD once again. And this is the last bearish candle. And after that, you can see this is the bullish, the bullish candlestick, right? And after that is heading to another uptrend. And when it touched to this other block, it start to bullish. It start to be bullish, right? So this is the correct example for this bullish, bullish candlestick pattern. And after another order block, okay? And if you watch my video on YouTube, this is gonna be this is a candlestick pattern I already introduced to you on my YouTube video. Three rising pattern method. This one. 1, 2, 3, 4, 5. Rising method. Okay, so that is the example for you when using a bullish engulfing. And the next one I want to introduce to you is the bearish engulfing candle. And the conditions is like strong bearish momentum and best accuracy when it appears at overextended highs. Overextended high. And once again, I will show you the example for the bearish over on the block to use this bearish engulfing effectively. And today's lesson, I will go very slow, to help you understand and can remember each candlestick pattern, how to use it with the best accuracy for your trading strategy. All right. So when you see the last bullish candle and after that it was a strong bearish candlestick happened, this is the bearish on the block. And when the after candlestick touch to this bearish on the block, it will start the bearish momentum. It will start the bearish momentum. Price retest and rejects this area. Okay, it cannot break out when it touched to this resistance or bearish on the block. And the example, okay, first we need to looking at the resistance zone, okay. Resistance zone. And you can see on the chart, there's a lot of resistance zone. However, this pattern is not always happened, right? And when we see it, and it meet enough condition, a strong bearish momentum and best accuracy when it appears at overstanding high. Yeah, it's this when you can use this bearish candlestick pattern. Okay, for example, this one is not the order block because previously it was continued to a bearish doji candle. Yeah, bearish doji candle. And uh yeah, the price, gold price keep on reject at 41.34. Okay, 41.34. And this was very strong bearish candlestick form. Okay. And when it touched to half the body of the strong bearish candlestick at the price 41.17. 41.17. It's having the rejection, yeah, from the bullish momentum. All right. And the next candle is very important for you when we decide to enter this setup. Okay. As long as the closing price is lower than the previous one, the open price, yeah, the open price of the candlestick after that is lower than the open price of the previous candlestick. And the body, yeah, the length and the body of the after candle is very small and still be inside, yeah, the previous one. So this is the good setup for you to enter the sell signal when you see the bearish candlestick happened, yeah, at the resistance zone. Or like this one. And another condition I want to advise you in this case that previously you can see this is a consecutive bearish candlestick, but when it touched to around 41.61, there is not any bullish momentum that support for investor, yeah, and support for the market to keep on recover, yeah, to recover to the previous high. Because this is for a very large liquidity, yeah, lack of liquidity. Yeah, like I usually share with you the fair value gap. And this is the zone with lack of liquidity, imbalance between the buyers and seller, because you can see this range from 41.68 to 43.18. Yeah, this is lack of buyers at this zone, right? And when the price recover to 41.67 or 61, the bullish momentum will stop and avoid. Yeah, it do not support for the bullish momentum happened to recover this fair value gap. Okay, and you can see another bearish momentum, bearish candlestick having very big body, and the lower wick is super tiny or super short. So this is indicates that even though we have the bullish momentum recover, but it's not significant. Yeah, it's not strong enough to battle, to defeat the sellers. All right, and that is that is the reason why for the upcoming bearish momentum or the downtrend keep on continuing at this case. Okay, so I hope you will understand it because in the gold market, yeah, I understand that we are gold traders, right? Most of the VIP members, they choose to trade for gold market. And for gold market, it's happened a lot of fair value gaps. Yeah, there's a lot of case for fair value gap. However, if price touch to near that fair value gap and the bullish momentum cannot occur, cannot recover the bullish momentum, that is when you know. Now the big players, the sharks, they do not want the price keep on recover. Yeah, as it should be. As should be. Okay, so that is when we can confidently to set up the sell signal. All right, because it's always tend to feel this fair value gap always, but we don't know when. All right, if you follow me long enough and usually watch my live stream on YouTube, I always remind for this case fair value gap, but fail to fill this gap. So that is when it's get a rejection for the bullish momentum. Okay, and for the bearish candlestick, yeah, this is the confirmation for you with the bearish engulfing pattern. All right. And obviously that is still heading down and having the short-term recover to the halfway. Yeah, now gold recover the halfway to 42.25 already. So like I told you, the market always tend to fill the fair value gap, but we don't know when. All right. So now it's recovered halfway, and in the near future, I do not tell you the exact time, like today's session, today trading session, or next week trading session. I do not advise that. Yeah, I just told you in the near future. Okay, gold will cover. Okay, and fill this liquidity. Yeah, liquidity. Fair value gap. All right, in the near future. So that is why, once again, I would like to remind you to set the stop loss and be disciplined to your trading strategy. All right. So I just introduced to you 4 pattern. That is just a single candlestick pattern. However, you can see that the frequency, yeah, the frequencies is usually happened the ratios is usually happened on the trading chart, especially gold market. Okay, so these are the key point I need you to remember to use it correctly to your trading strategy. All right. And I would like to end the lesson now because this part today lesson I will divide it into the smaller one. Yeah, the smaller live stream. Many live stream we were talking about this because I want to go slowly.